The counter is one of the biggest gainers of the Nifty IT, now up 1.8%, and the company actually held one of its investors' day yesterday, and where AI has actually taken center stage. To talk more about what he makes of TCS amongst others, Sandip Agarwal, the fund manager and co-founder at Sowilo Investment Manager Limited, is now joining in. Sandip, very good afternoon to you, and thanks so much for joining in. Firstly, your first reaction on what you make of the updates that came in from TCS's side yesterday, because with AI being in focus, they've given some stark numbers in terms of the analyst day. Your view to start us off with.
Yeah, hi, good afternoon, and thanks for having me on the show. So yes, I have seen the updates which has come from the analyst made through some of the broker notes and all. So it is very encouraging to see that they have for the first time disclosed the AI revenues, which are quite substantial, $1.5 billion and growing at a good pace above company average rate. And also, I am more excited about the next generation business, which is around $11 billion, and that is also growing above company average. So this is good data and gives a lot of comfort. But my only challenge remains is that this AI and the related technology right now is still in the adoption stage, and there is a lot of disruption which will happen. So basically what will happen is that AI will start replacing the traditional pieces very swiftly, and when that happens, then we are having two challenges. One, that the effort which will be required in the traditional piece will be 25-30% lower, and on the positive side, the pricing may be slightly better, but I don't think pricing will be able to mitigate this. So if you assume that 60-70% of the traditional piece will be disrupted in next 7 years, so basically we are dealing with 10% disruption every year with 3% lower effort, and that, let's say, 1% is covered through pricing. So I think still we will have, these companies will have a challenge of 2% negative impact every year from the traditional piece getting cannibalized to AI. Now they have to not only grow their balance business but also this loss which is happening. So I think growth will remain muted till this becomes substantial mass, which will take at least 18 months to 24 months, in my opinion. Once that, and then it will show up in growth. So I believe that they are doing all the right things by getting into related businesses, and also putting up a separate service in the AI side and all that. And the aspiration, the targets and all are very good. They also have a big advantage that in India, the talent is available at a scale and they have everything to do. So I firmly believe that TCS, Infosys, Excel, all these large caps will do much better than the international services players. But at the same time, the multiples are also very demanding. So I think that we will see 12 to 18 months period when these stocks will look very expensive on PEG ratio. On PE basis, they may look lower, because the earnings growth is very low. Right. So I don't know whether long-term investor will put money right now or they will put money with after some time. Although rupee helps a lot in hiding as a hiding place in this space right now.
Right. Yeah, I was just going to talk about that, Sandeep. So let me actually skip that topic, because you've given a view on rupee very quickly as well for the IT companies. While Q3 is generally a weaker one, they will get some benefit of that in this quarter. Before I talk to you about margins amongst others, I wanted to just get your perspective, since you've tracked this space for a long time. When TCS says that they are redefining all its services through AI and mentioning that they want to build a future-ready talent model, what, according to you, does that significance mean for investors? Because you have highlighted that the talent is quite available in India, but the model is now changing through AI. So all companies have looked at headcount. When companies like TCS come out with this statement, does that largely mean that headcount will largely remain at the levels that they are for each company, and it will be based on what training models that they give to each of the employees? Is that how we should look at it, and your view on this particular statement as well?
No, absolutely. So, I must say that all the large Indian IT companies and even the mid-cap companies, they have done an incredible job in terms of, not letting people go. And despite such challenging environment in last 18 months to 24 months, you have not seen a lot of involuntary attrition. So basically, they have been able to, reassign the tasks, retrain the people and all those things. And I think that is a commendable job. You will not see that happening in any of the international company when environment is so bad. But what in my opinion is going to happen is, for next 18 to 24 months, you will see same thing continuing. You will not see substantial number of employee addition for any one of them, because whatever employees they have, they will try to retrain and retain them. So I don't foresee a very substantial jump in net employee addition for the whole industry. And obviously, all these companies always have prepared their own training modules and have sent to the colleges, and also on campus training everywhere. Their own modules are only used because that is the right way to execute the projects. You have to train your people based on what your client demands. So I think that is a very, very promising thing, and it is the right thing to do. And I think
Right.
this will gain more acceptability going forward.
Sandeep, before we wrap, you mentioned about large cap players. Largely, according to you, it doesn't make sense to buy into it so that it could get that returns in the long term. How do you expect the comments that have come from TCS affecting the mid cap players? Do you think that they will have to come out with more transparency in terms of AI being a growth driver for them in terms of revenue and metrics? Do you think that this will help the industry get more transparent with investors?
So the way I look at it, see, while TCS is the first one to come and give clarity, I think all of them will be having similar percentage today. 5 to 10% of their total revenue would be AI driven and all that, because we interact with a lot of small tech companies, mid-sized tech companies. The only thing is that the percentage is so small that they are not very sure whether they need to disclose it right now or not. Some of them also are worried that if we disclose a 5%, 10% number, then the investor community may be more worried that 90% is traditional, and the repercussion could be negative for no reason. But let me put it this way: I think incrementally mid cap will do better than large cap, and small cap will do better than mid cap, because very simple reason: the way disruption is happening, the timelines are getting squeezed shorter and shorter, and the deal sizes are becoming shorter and shorter. So the 5-7 years back, the advantage which large cap used to have to participate in a bid and based on the balance sheet requirement, those requirements are completely diluted since COVID. So more and more mid and small caps are able to participate in almost every deal. So now the competition is not between 4 or 5 players, it is between 25-30 players in every transaction, every deal which gets floated. So I think definitely small will do better than mid will do better than large, and large will be stable growth engines. That is the way we look at it. So if we at all any point of time we will invest, we will prefer small over mid over large, and also will prefer ER&D over the traditional IT services.
Very interesting, Sandeep, and paucity of time, so we'll have to wrap up this conversation. But a 20-second answer, if you can, what to expect from Accenture today, something you'll watch?
So we will be more interested in how many people they have been able to train in the AI, because that is the most important parameter for us.
Sure. Well, thanks so much for that, Sandeep. Appreciate your time. You're on NDTV Profit. Look forward to our next conversation. Well, we'll slip into a very short break.